Hey, greetings, Dr. Jeffrey Scott here, and this is my nightly market MRI Pro update. This is for Thursday, April 3rd, 2025, and boy, was it quite the day. Tariffs tank the markets is the title. Again, my name is Jeffrey Scott, and you can reach me at hgsidoc@gmail.com or marketmripro@gmail.com. Quite the day. Not much of a surprise, though. Disclaimer, this is for educational purposes only. Anything I recommend should always be taken in the spirit of education and not investment advice. The intent of the video is to demonstrate how I look at the markets from a top-down perspective, how I apply my rules. Trading involves risk, and you alone are solely responsible for any investment decisions you make. I may own or intend to go long, short, buy, sell any stock I mentioned. Trading stocks and options should be considered risky and should consult with your financial advisor before making trades. And I have tools for multiple platforms, but am an independent trader. All right. For those that are interested in live events, we do one for sure a year, and then sometimes I do a back half of the year in Florida. This is the cheap one, meaning it's $300. It's at the Residence Inn and Suites, Tustin, Orange County. There'll be myself and 4 to 6 speakers. GAM72054 at AOL.com. We're actually building out Market MRI Pro, a personalized version for another educator, one who I'm friends with, think highly of, and if we can get it done by then, which we should, I would suspect that he, who I will announce his name as soon as he says yes, will be available sometime to probably come in on Zoom during the meeting. So more to follow, but it'll be exciting. I do have a Google group. It's called Top Down Trader. Why would you join that? Because some days like yesterday or the day before, one of those days, I just didn't have enough time to put it on YouTube, so I just record them and I post it on the Google group. I send out an email so you know I posted them. Other things is I give you discounts on my tools. I have impromptu and scheduled educational events, and there is some dialogue back and forth. So love to have you. There's no cost. In fact, there's negative cost. I'll give you a discount coupon or a discount code when you buy something from me. And I'm not doing it to solicit you. If you look at what do we have left this week, just when you thought it couldn't get worse, you got the monthly employment report. What are we expecting tomorrow? If it comes out strong, the market participants will say it doesn't matter because the tariffs are going to change that. If it comes out really weak, it might be good or bad depending on how you look at the economy, and it might try and force the Fed's hand. If it's a little weak, who knows? I think that it's going to be interesting to see. And imagine that probably the biggest employment report in months. Powell is speaking at 11:25 Eastern, so it should be a heck of a day. Some earnings came out after hours, and I looked at them earlier. It's right now it's about 9:30, and FIVN was up a little bit after hours. Guess was down 0.5%. Really nothing much on earnings. So let's go and let's take a look at some charts. All right, let us look at the one-day performance. So this is looking at what happened in the markets. It's end of day at this point. You could see the VIX had a massive spike up 24%. And then these are the major ETFs, Diamond, Spider, Qs, and Russell, from 4 to 6.5%. Brutal. The VIX finishes just at the high of the day, and you could see that the others are at the lows of the day. The number of new lows dramatically increased versus new highs on both the NYSE and the NASDAQ. Shockingly, In the S&P 500, we did have one positive um, ETF for sectors. It was XLP, staples, which is defensive. You look down here, um, tech was down 6.82, discretionary was down 6, energy was down almost 8%. A brutal session, and interestingly, the only things that were positive on my different what would I call these themes was renewable energy and telemedicine. If I go down here, and the formatting is a little funky, you can see exploration down 10%, Internet of Things down 9.2, semis down 8.65, transport down 8.56, retail down 8. These sectors were broad-based destruction of the market value. If we look at three different indexes, the S&P 1500, the NASDAQ, and the NYSE, you could see there were no positive sectors on the more broader indexes. If you look at industry groups, 8% on the S&P 1500, 6 on the NASDAQ, and 9% were up on the NYSE. That's pretty darn ugly. And if you look at positive stocks, 10% on the S&P 1500, 13 on the NASDAQ, 13% on the NYSE. If you are holding long positions and they're not contra ETFs and you made money today, God bless you. Um, but it was very difficult when 90% of the stocks are down to make money on the long side. Now let's just open up. I'm going to pause and I'm going to pull over my trade station. All right, I just wanted to look at the intraday futures. I'll look at the daily charts in the Market MRI app. Praveen and I have talked, and I think what we're going to do is put a couple of intraday time frames into the program. I do most of my trading end of day. The program really mimics what I do, although most of this information I'm showing you is available during the day as well. But I do like looking at futures intraday. So whether it's across all the windows, you'll have intraday, or just in a futures chart or two to be determined. But you could see what happened. This is a hour chart, and this was what happened. We closed the day on a high, and then Trump tariffs came out, and I kept looking for that bounce. And this bounce occurred overnight. The market pretty much sold off. And you got a nice little trend line here, and we haven't broken above that trend line. This is the ES, the NASDAQ. The picture is going to be the same everywhere. The Russell, the Dow, the Russell, and even Bitcoin. So it was a pretty weak session, and it ended on the lows. The timing brief, you could see a big move down on the weekly chart. The key is that we remain in a sell on all the weekly, no surprise. Now, think about this. My model said to go short or to not go long in this area. I questioned it because it closed below the WMA barely, and then it reversed. I felt bad about it, double topped, and then it broke down. Now it looks like a pretty good decision. You could see that on the Dow, the Qs, we missed it by 1 bar on the top. On the diamonds, a little bit off the high, and the Russell was right after this, really a bar or two after the all-time high. You can't expect to top tech every up and down of the market. You just want to get out and avoid much of the damage. So all the weeklies remain in a sell signal. If we look at the daily, I'm the most impatient person in the world. On the daily, you could see the flags and the breakdown really across the board. Just nothing through all the support. Really a bad looking session. This was something I wrote here where there was a gap and then it was support, and we blew right through that in the markets on Thursday. So not a pretty day. Are we oversold enough to get a bounce? We'll take a look when we look at the index charts. And no surprise, the only thing that on the daily that was in a buy was we flipped on the diamonds on this bar. So weekly down, daily down. Eventually we're going to be so oversold we're going to bounce. Are we there yet? And my answer would be probably not, although we certainly could. And just as I spoke yesterday, I don't expect us to be able to recover with a V. I don't expect us to get over the falling 50 or the WMA here, and you'll see the 200 and the 50 on the index chart. So the timing model says sell, sell, sell. The 13-week new high, new lows are getting to points that you'd expect a bounce. And we could get one in the next day or so, but this market is pretty ugly. So that's the question. When are we going to bounce? How big are we going to bounce? And what am I going to do about it? If I look at the index ETFs, you could see just the degree of the sell-off here. Almost 5% on the spider. When's the last time? That was 22 probably. Over 5 on the Qs. A little bit less than 4 on the diamonds. Even more on the 6.5 on the Russell. A big move up closing at the highs on the VIX. VIX was up 37.75. That's different than the VXX in our other tool, different index. And you can see the dollar dove as well on the tariffs, down 1.76%. That's bizarre because typically tariffs lead to a stronger dollar, and the stronger dollar is not happening right here. Somebody must think that these are going to put the economy into recession. Now, I had my team at work in today, and I talked a little bit about what I thought was going on in the market. No, it's not a market job, but it's a bunch of people who have 401ks and other investments. And I said it's kind of like a Lehman Brothers day, where the market just is, it's just going to fall. And I also, and I'll say it here, it will bounce someday. Whether it bounces tomorrow, I think the employment report is going to have a lot to do with that. If it bounces next week, but typically markets recover, just takes time. And this is a weird one. This is sort of an artificial. This isn't the global financial crisis. This is a tariff crisis. And tariffs can be undone. If you look at gold, you can see gold sold off like everything else, 0.5%. Silver, which was lagging gold, it was flagging here, broke down considerably, down almost 6%. Difference is probably precious and a place of storing a value, and silver perhaps has a little bit more relationship with industry. Oil, again, demand concerns down 7%. Interestingly, natural gas was actually up 2.16. So maybe a successful retest and it runs again against old highs, and then or recent old highs. And then you look at 10-year down 3.5%, 30-year down 1.5%. Boy, somebody thinks the economy's in trouble. That's what it tells me. And then you want to see impressive. Look at our buckets. And instead of me having to highlight, you can just see how many stocks are below the buckets by looking at these numbers. 44% of the NYSE are below their Bollinger Bands. 54% of the S&P 1500 below their Bollinger Bands. 57% of the Russell 2000 and 39% of the NASDAQ. Now, first glance, that is so impressive we must rebound tomorrow. Not really. In fact, I just wanted to share this with you. This was not the bottom of the great financial crisis. This was the week around October 1st of 2008. And what I wanted to point to you is we had that 50% of stocks below their Bollinger Bands like we're seeing today, and then it went to 70, back to 50, back to 70, and then it finally started to shift back towards the right. So this slide reminds me that oversold markets can get even more oversold. And I think the key is if we are in a bear market here, and we're kind of in a bear market here, that stocks can get even worse before they get better. So let's go back to the timing model. I can't resist timing model because I'm not going to show you a lot of stocks to buy today. In fact, I'm not going to show you any stocks to buy. We may look at some things. Let's find 2008. One more. And I love that I can do this. Thank you, Praveen. 2008, October 1st. So I'm going to move out. It's by design. It shows up in the middle. I just wanted to look here as if we're looking at October 1st. And October 1st is 7th, one of these little bars. All right, that's October 1st. That is the day we saw all the buckets. Now, if I look at the markets there, I see on the daily, we're in a sell. On the spiders, the Qs, the diamonds, and the Russell. Now, that did not show me that the market was going to recover. So let's just see what happened. And this is my point. Even though we reached an area of massive oversold by the buckets, they're more useful, I believe, in a bull market to pick up pullbacks in an uptrend. They're less useful here. And look at the fall that we still had despite the fact that we had those massively down buckets. Now look at what my timing model did at the same time. You were short the market from September, and you were long in a sideways market. You were out of it most of the pullback. You were in a very short period of time, and you got in, or you went short the market in May of '08, 2 bars after the top. The goal is to stay out of the market during bad markets, and I think my timing model is actually pretty interesting for that. It's going to be late to get you in, late to get you out, but you want to avoid the majority of damage. So I look at where we are today, and I can't say that we're done going down, despite the buckets. So I'm going to be careful just like you. I'll watch the stocks and see where we go. If we look at market breadth, big breakdown in the NYSE, another gap down and breakdown on the NASDAQ. You could see new high, new lows, advanced declines, and up-down volume all massively negative. A bingo occurred today on the NASDAQ, which is a baby out with the bathwater. You could see how stocks above the 20 in green, 200 in red, 50 in white are cratering, just to show the breadth deterioration. Worse on the NASDAQ than the NYSE, of course. Look where the NASDAQ is. We are getting oversold. We are going to bounce. But let's go back to the index charts and ask the question, where are we going to bounce to? So I look at this chart, and I'll just look at the spiders. Let's blow up Mr. Spider. And let's get my trend line tool. You could argue that we got, oh, don't do that. Try that again. Well, I don't know why that's not running. It should be running here. Well, I think that's something we got to turn on. But you're going to have resistance here. You're going to probably have resistance here. Certainly going to have resistance at the 200, and you're going to have resistance at the 50. And will we have a death cross before we have a breakout? So, yes, one can hope that we're going to get a bounce, but one has to expect that to be a tepid bounce, a dead cat bounce, and potentially come back to either retest or set lower lows. That is my working case. Massive volume sell-off. Every dot was red. EMS signal, CPR, gap, volume, breakout, momentum. This was a horrible session in the U.S. markets. You look here, you see minus 100 on the high jump. And what that tells me is if I look back 100 bars, or excuse me, 200 bars, this is the most extended to the downside we've been. Another reason to kind of expect a bounce soon. So Do I expect a bounce soon? Yeah. I can't tell you when. I don't think it's going to be to new highs. So, clearly big gap downs and lots of damage on the major indices. The VIX went crazy. Just a tough, tough, tough market overall. If I go into the JAS layout and I look to see what was up in the market, we know there was about 10% of the stocks were up. And let's put a filter on and take out small stocks and stocks that are very cheap. So that left us with, let's see, any of these names that you recognize. Goodyear Tire, um, nice move. Did it have earnings? No earnings today. So Goodyear Tire, which had a big earnings surprise on both earnings and revenue, does not pay a dividend. Clearly in a downtrend, broke above the 200 on massive volume. Was there news? So notice how this is all built into my platform. Favorable position is consumer pivot to domestic products, so domestic tire producer. That's kind of interesting. Lamb Weston, consumer defensive. Staples, not surprised. Molina Healthcare. And this was one thing I noticed. The healthcare providers, which had been beaten up, looked really good today. This is Molina. I saw CNC, Centene. Got to get above the 200. Elevance. Breakout above the 200 would be interesting. So why are they up? Because they're very defensive. If we look at the top down and we see what was leading sector, they're all bad, but the least bad was consumer defensive. And if you look at what's in consumer defensive and what was working, tobacco, food, beverages, farm products, and what was the best of the farm products? Vital Farms, Tyson, Dole, not my usual type of growth stocks. If I don't want to look at the leading sector, and instead I want to look at what are the leading industries in the market, put that out. So I could rank them by that, and I'm not really going to look at SPACs, but we have medical health care plans, distribution, water, tobacco, food, beverage, electric, real estate, 1, 2, 3, 4, 5, 6, 7, 8. Agriculture and gold would be the 10. And then what I typically do, and this is top down, I took the top industry groups from all the sectors combined, and I'm going to look here at 2-day momentum and see if anything looks interesting. So we looked at Molina already, breaking out from a downtrend. I always want to know when earnings are out, so I might leave that there. Earnings came out in February. Next one up was McKesson, and I've talked about this a lot. This is a stock that does great in good and bad times, and what a great move. Again, no earnings until May 6th. Pays a small dividend, breaking out probably to all-time highs. Elevance we looked at, United Healthcare. This is the big daddy. This one probably has the most issues with that recent assassination and their changed care debacle. Core, Cencora, just like McKesson, a drug distributor, looks great. Cigna, another payer. So are these stocks at great buy points? I haven't seen one yet. But this is where money is rolling into defensive-looking companies. Philip Morris, of course it's defensive. It's tobacco. It pays a dividend. How big? It pays a 4.38% dividend. Look at the surprise on earnings and revenue with the last and the beats or the growth. So there are places that are working. As a cancer doctor, I'm not going there. AWK, water, breaking out to new highs. I think we looked at this one over the weekend. So I'm just going to summarize that part and say, be careful. There's not much working. We're going to get a bounce. Expect that in my mind until proven otherwise. It's a dead cat bounce. How will I know it's not a dead cat bounce? That'll be easy. What'll be easy about it? If I get above the top of the flag and above the 200, I've already exceeded my first target. If I then take out the 50, especially if there's volume, I might believe it. But until that happens, I'm going to treat everything that happens as a temporary sorry about that, oversold bounce. So, last anything, excuse me, from a top-down perspective, from a bottoms-up perspective, here's where I typically go in and I drop a couple of my trading systems. First one I like is 2 days Momo up. No surprise, nothing made it. How about 2 days momentum down? I bet we got one of those. NMFC, cheap stock, breaking down. Any of these expensive? Let's look at John Deere. So I don't know how much John Deere does outside the U.S., both from selling, I think it's considerable, and maybe that's the concern. Let's see if it gives me an answer of why John Deere was down. I think it's because of their selling ex-US is going to get tariffs. Well, that one, here was your retracement. There was your shot to short it. So more things look good to the downside than the upside. I'd be careful. I'm looking for a a dead cat bounce. Maybe we get it on Friday, an attempt to rally based upon the non-farm, the employment numbers, but I'm not banking on it. Sorry, I'm losing my voice. Excuse me, that must sound horrible. Thanks for being here. Sorry for the voice. Be careful out there. This is a tough market.